Hello everyone, this is Dan Gramza and welcome to Gramza Market Studies for Thursday, September 1st. We were looking for unchanged to higher in the stock indices, and that's what we're seeing. However, we are coming near levels that so far we have not met the challenge. So the market is a little bit cautious at these levels, and we do have some numbers coming out today and Friday with unemployment that people are going to be focusing on. But we are still looking for buyers to stay in place in these stock indices. When it comes to the currencies, we've had a few things going on. One, if you look at the euro, it did trade back down a tad bit, although I think this is actually a bullish market. But right now it is trading lower. The difference between this red line and the green line in the euro is 60 ticks. That's the difference. And again, I'm not suggesting that anyone would get these prices, that anyone should get these yields on these trades, but it gives you a feel for what that magnitude change would be if these buy and sell levels did occur. Now, let's look. Well, we should also probably talk about the Swissy. The Swiss franc also traded back through this green line. The difference between the red line and the green line there in the Swissy is 1,075 ticks. Now, I oftentimes get questions about the currencies when I just give the numbers and then I don't explain how they work. So if you're not familiar with currencies or in futures, is that the smallest increment of change is 25.001. It's the fourth digit. So it'd be 2501, excuse me, not 3 zeros, 2 zeros, right here. Each one of those increments of change is called a tick. Each tick is $12.50. So all you'd have to do to figure out the dollar value of that change is that you would take 1,075 ticks times $12.50, and that would be $13,437.50. So that's how you would convert those ticks into dollars and cents. Different currencies have different tick values. You know, for example, the Aussie dollar has a $10 per tick value. All right, well, what are we looking for here? We have a mixed bag. We got the Aussie dollar getting stronger, which means the US dollar is getting weaker, but it is, as I talked about in the advanced video, at critical levels for this market, and we are seeing it slowing down as a result of that. So we're looking for more of the action the same. We could get a big kick in volatility in these currencies, and I think the euro was posed for a push to the back to the upside actually. Now, interest rates, sideways type market. Again, it's a function of what happens with the stock market. I also want to point out to you that this particular market kissed that buy level. It would not have reached a magnitude objective, and if it would have been filled, it didn't trade through it, but it did kiss it. If it would have been filled, that would have created a losing trade. To the downside, it would have reached a magnitude objective. And again, I'm just talking about in general. These are things that I look at. And in the bonds, the same thing. This happened to reach a magnitude objective to the upside. That would be the concept. And right now to be a neutral stance for that market. But we are looking for a sideways market. If the stock market rallies, these guys should come off. In the metals, let's talk about silver. We haven't said much about that lately. Here's a sell level. There's a buy level in silver. Now that difference here is 50 cents. Again, to give you a feel for how silver trades, it trades in 0.005 increments. All right, so it'd be 42.005 would be the last value, and then it would change accordingly, that half-cent increment. Now that's worth $25, each 0.005. 1 penny is $50. 10 cents would be $500, to give you a feel again about the magnitude change. So you could take, the 10 cents times, this is 50 cents, so it would be, 5 times 500. All right, but let's move on here. Copper, looking good. We're looking for a rest day in that market. In the energy, we're seeing a market moving higher. It's at a level though that I just don't see the justification for a strong rally here. A sideways market, yes, depending on the dollar, even lower if the dollar would really strengthen. So right now I'm kind of suspect of crude oil, but nothing telling us that we should be a seller at these particular levels. In the grains, we had soybeans backing off a little bit. We saw a loss of momentum. So did corn and wheat. Some of the discussion is that there may be a lesser demand for these products, but from my point of view, even if the demand would come down, if you look at global picture, you look at global demand, and you look at global supply, and you look at our weather conditions, it's just hard to imagine long term these guys do not go back up. Well, this concludes today's market studies. Thank you for joining me. Looking forward to being with you again. And in the meantime, take care.